Welcome to the deep dive.
Hey there.
Today, we're looking at Rocket Lab's Q3 2025. Really interesting results, record execution, but also a big shift on the Neutron timeline.
Yeah, exactly. We're going to synthesize the financials, what they're actually doing operationally, and what this Neutron delay really means strategically.
Right. So mission is basically cut through the numbers, get to the story.
Pretty much. It's a story balancing now and later, which is always tricky.
Okay, financials first, because Q3, it was, well, spectacular.
It really was. Record revenue, $155 million.
Yeah.
It's a 48% jump year over year.
Huge.
Massive.
Yeah,
And it's not just like small steps. This feels like real scaling.
It is, and you saw the market react, right? Stock up almost 4% after hours.
Yeah.
But the really critical thing, I think, beyond just the top-line revenue, is the margin performance.
Yes. That tells a story about their whole strategy, doesn't it? The vertical integration paying off.
It absolutely does. GAAP, gross margins hit 37%. Non-GAAP, even better, nearly 42%.
42%. And remind us where they were just a few years ago. Get this, back in 2020, their GAAP gross margin was negative 34%.
Wow. Okay.
So yeah, getting consistently into the high 30s, low 40s now, that's an enormous turnaround. It shows the space systems part, building components in-house, is really driving efficiency.
And that kind of solid base lets them invest, right? Liquidity looks strong, too.
Oh yeah. They ended Q3 with over $1 billion in liquidity.
$1 billion.
Part of that came from the ATM offering they did in September.
The at-the-market equity offering, can you quickly explain that?
Sure. It basically lets them sell shares directly into the market over time when the price is right, instead of one big offering. It's a flexible way to raise cash, especially when you've got big projects like Neutron needing funding.
Makes sense. And they definitely have projects lined up, judging by the backlog.
Backlog's solid at $1.1 billion.
And how much of that converts soon?
That's the key metric here. They expect 57% of that billion plus to turn into revenue in the next 12 months. That gives investors, really good visibility, stability.
Okay, so good visibility leads us to the outlook. What are they forecasting for Q4?
They're pretty optimistic, guiding for $170 to $180 million in revenue for Q4.
So another step up, like 12, 13% growth quarter on quarter.
Yeah, about 12.8% at the midpoint.
Yeah.
And they expect those strong margins to stick around. Non-GAAP guiding between 43 and 45%.
Still investing heavily, though, so still looking at a loss on the bottom line.
Exactly. That profitable core business is funding the future, like Neutron. So adjusted EBITDA loss is forecast between $23 and $29 million for Q4. That's the R&D spend right there.
Okay. That's the strategic tension, yeah. Spending now for the future growth.
Let's shift to operations then. Where's this record performance actually coming from?
Well, two main engines, right? Electron launches, obviously, and the space systems segment.
Electron's really hitting its stride.
It's become an execution machine. Q3 was a record for launch contracts, 17 dedicated missions signed just in 3 months.
17, and a lot of international interest. Hugely international. All but 2 of those were for customers in Japan, Korea, Europe. It's really cementing its place as like the go-to small launcher.
So the backlog for Electron itself is growing.
Yep, 49 missions now in the Electron backlog.
Yeah.
And they're pushing the launch rate up to meet that demand.
Right, the cadence. They want to beat last year's record.
They're on track. They hit their 16th launch for 2025 just before the earnings call, aiming for 20 plus by year end. And a big part of that tempo capability comes from the HASTE missions.
The hypersonic test flights for defense. That really shows off their responsiveness, doesn't it?
It totally does. It's a critical capability for the U.S. defense side. Think speed, quick turnaround. In Q3, they did 2 successful HASTE launches in just 8 days.
8 days. From Virginia.
From Launch Complex 2, yeah. That kind of agility is exactly what defense programs like the new Golden Dome stuff need.
Okay, so Electron's humming. What about space systems? That brought in, what, $114 million in Q3?
$114.2 million, yeah. A huge chunk of the total revenue.
And how does their M&A strategy, buying up component makers, feed into that?
It's central. They're building this end-to-end capability, especially for national security work. And the acquisitions often have immediate financial benefits, too. Look at GEOS.
The sensor company they just bought?
Right. Electro-optical, infrared sensors.
Yeah.
Expands their payload offerings for defense contracts. But interestingly, the GEOS deal actually helped their reported earnings per share this quarter.
How does an acquisition do that? Seems counterintuitive.
Accounting complexity. They recorded a $41 million tax benefit related to the transaction. So it's a clever way M&A can immediately boost the numbers you report, even while you're integrating the tech.
Wow. Okay. Strategic finance right there.
Definitely. And they're also moving forward on acquiring Mynaric.
The German laser comms company?
Yep. Mynaric finished its financial restructuring, so that deal's getting closer. Gives them a key capability and a European foothold for laser links, which everyone needs for these big constellations.
Like the SDA work they're doing.
Exactly. SDA Tranche 2 is moving into full production. Tranche 3 awards got delayed a bit, with potential government shutdown issues looming earlier, but that's moving forward.
And we can't forget NASA's Escapade mission to Mars. Those spacecraft are ready.
Twin spacecraft, built by Rocket Lab, fully integrated, ready to go. It's a big showcase, proving you can do planetary science faster and cheaper, kind of democratizing deep space access.
Okay, which brings us back nicely, actually, to the big future bet. Neutron, the reusable medium-lift rocket. And the timeline update.
This is the big news from the call, really. The schedule's adjusted. Neutron is now expected to arrive at Launch Complex 3 in Q1 2026. First launch sometime after that.
Q1 2026, so a delay. But they're framing it very intentionally, right?
Very intentionally. Peter Beck, the CEO, was super clear. It's about diligence, following the Rocket Lab process. It's not about rushing just to get off the pad.
They want first-time success, orbit on the first try.
Exactly. Avoid a failure. Which, given the complexity, it's this huge carbon composite structure, the whole reusable first stage, that hungry hippo fairing.
Right, the fairing that stays attached.
Yeah, and the suspended second stage passing through it. It's novel stuff, so they want to test it rigorously on the ground.
So what specifically needs more time? Is it the structure, the engines?
It seems like a bit of everything, but especially validating that novel architecture. They're doing tons of structural tests, load testing beyond anything it'll see in flight. They want to find any weak points now.
And the Archimedes engine. Reusability adds complexity there, too.
For sure. Engine testing is running, almost nonstop. They said 20 hours a day, 7 days a week, trying to cram years of test hours into months. Archimedes needs way more testing than the expendable Rutherford engine on Electron because it has to handle both ascent and descent stresses reliably.
This extra diligence, this process, it costs money, though.
Oh, yeah. They estimated the delay adds about $15 million per quarter to the burn rate, mostly labor cost for the extended program.
$15 million a quarter. Ouch! And the total cost is going up.
Yep. Cumulative spend on Neutron R&D plus CapEx is projected to hit $360 million by the end of 2025. That's above their original target of $250 to $300 million.
They think they're nearing the peak spending phase.
That's what management signaled, yeah. Peak R&D should be approaching.
And despite the delay, customers are sticking with them. Neutron has bookings.
It does. Already has 2 fully priced missions in the backlog. That's a pretty strong vote of confidence, suggesting key customers understand and, frankly, probably appreciate the careful approach. They trust the process.
Okay, so let's try and summarize this deep dive. Q3 looks like a company really hitting its stride operationally.
Nailing it on execution. Record revenue, great margins from Electron and Space Systems.
But using that success, that cash, to very deliberately fund Neutron, even if it means pushing the schedule back to ensure reliability.
Exactly. That $15 million extra per quarter. That's the price they're willing to pay now to avoid a much more costly failure later. Beck's quote about execution and reliability being critical, especially in public markets. This delay is that, quote, inaction. They're buying insurance.
It really makes you think, doesn't it? A provocative thought, perhaps, for you listening. If a company like Rocket Lab, with momentum and cash, feels it's worth spending an extra $15 million every 3 months purely for meticulous qualification, what does that signal about the future standards for the whole launch industry?
Right. Are we seeing a shift where just getting to the pad fast isn't enough anymore?
Yeah.
Maybe reliability proven before first flight is becoming the real benchmark?
Especially as the market gets more crowded and maybe more discerning, are competitors choosing speed over that deep qualification actually risking more in the long run? Their credibility.
It's a fascinating question. Process versus pace. We'll see how it plays out.
Definitely something to watch. A great deep dive today into execution, scale, and strategic patience. Thanks for joining us on the deep dive.
See you next time.